Yeah, hello everybody. So today quickly I want to talk about time and timing. What is more important on the stock exchange is the timing is very difficult. I would say it's the time, the holding period. The longer you stick to a great company, the better you will do. I mean, the timing, it's a thing, it's very difficult. Generally, you can be lucky and catch a stock, pick it up at a great price, but it's very difficult. There's no science, there's so many things playing in. It's kind of a random thing, it's a little gamble stuff. So focus on the time, focus on decades, pick up great stocks and keep them very long. A lot of people that are die now, old teachers in the 80s, 90s, or some workers, a lot of women that die now, they have a huge bank account because now they have a fortune built up because people find now they have bought in the 60s or 70s some AT&T stocks or whatever, and they kept that stuff, and over the decades they build up a small empire, and there's a lot of money made once you stick with great companies. And that tells you a lot when you read those cases. When an old lady, there was a lady in Connecticut that died 2011, and that she had like 6 million. She made 6 million, that teacher, when she died, and that money went to a church, to a school, and non-profit. Just amazing. So what I recommend, there are a lot of newspapers that tell you a lot what you should do, and there are a lot of news every day. News, and here, for example, a German newspaper, or here a British. They tell you, or here one from Zurich. They tell you a lot a lot of news, and there's a lot of stuff going on in the world. But if you have a great stock, like think about a company like Nike, the shoes, I mean the sport clothes. Does it really matter what happened the last quarter? I think they will do fine over the next decades. Or think about other companies out of the Dow Jones 30 or in the S&P 500. Does it matter Bank of America or Goldman Sachs? How will be the next EPS, the next earnings per share in the next quarter? Does it really matter? Procter & Gamble, for example, the new old CEO that came back, he decided not to attend anymore the quarterly conference calls with the analysts because he says it's not my focus. His focus is long term, and he doesn't give any predictions for the revenues or EPS because he wants to focus long term. And I think that's a great thing. The same you see at Unilever. The CEO thinks and acts long term. And it doesn't matter if the EPS is 5% or a penny down or above any expectation. What matters is you build trust. You are fair to your clients, to your customer. You deliver a great product. You deliver a great service for a fair price. You are honest. And that pays off over the long run. If you have happy customers, look at, for example, Best Buy. I was there yesterday with a friend. We picked up some stuff. Best Buy, how friendly the people are there. The salespeople, they are so friendly. And you walk in and you get great deals. He bought some Chrome stick from Google, and it was like for $30. And even on Amazon, it costs more, $29. And even with shipping and handling, Amazon is more expensive. That's how this company made a turnaround. It went up like several hundred%, and this year like 200-300%. It's an amazing stock because it delivers and great service, great prices, and good products to the people. Over the long run, that actually matters. I don't know if that stock will be, the company will perform very well in the next several decades. I don't know. It could be. But that's what you want as an investor. Stick with it, go long term, think and act long term. Think about the time. The time really matters. And the daily news, it's important to read. Of course, it's important to get informed, but it's not necessary to act on every news that's out there in your portfolio. It's just those people that are very calm, they perform better, and that are not nervous, and they don't act too much. So if you are not a buy and hold investor, what you can learn from this, at least you should try to lower your transactions, the turnover in your portfolio, lower it, take it down. At least that would be, I think it would be a great thing if you would do that, or at least try it. And for the buy and hold investor, is a great thing is to save up some money, cash on the side, on a CD or in your account. Once you have it every 3 months or 6 months, when you have saved up a nice amount, keep on buying great companies, add to your positions, or buy new companies. And I like the most are those traditionals that are around for some 100 years at least. And so once you do that over long periods of time, it's an engine. The stock market is because GDP goes up per capita. We have more wealth, we have more science, we have the middle class in the emerging markets is growing. In America, it's getting better. So those companies also benefit from the wealth that is created in the world, from the knowledge and science and progress. So the best way to benefit from all that trend, from those mega trends and population growth from 7 billion is expected to grow to 10 billion. How to benefit the best is just buy great companies, keep them and add to them more, and just, I think also is be down to earth, live a frugal life, save some money up. Don't think that Social Security will be enough when you retire. Just put some money on the side and you will do fine over the years. And I wish you all the best. Okay, bye.